Kelly, thanks for your time. You're in Christchurch as part of Business Canterbury to speak to members. And what I like, and of course I'm biased here, it really feels like the Christchurch or Canterbury economy is somewhat segregated from the rest of New Zealand. Why is that in your view?
Yeah, well, I think that's right. Like across the nation, the economic times are pretty tough right now. Economy's been going backwards probably for a year and a half. Canterbury has shown a bit more resilience. And I think one of the kind of key things that we've identified here is that you've been particularly well placed to take advantage of the improvement in the tourism cycle that's resumed after that obviously very negative period through the COVID period. One thing that we've noticed here is that the cost of living is a bit lower, so you've tended to be attracting people, so population growth is actually pretty decent in Canterbury.
Don't tell many people that. Let's get out.
That's right. That's coming across in a context where there's a lot of population growth across the country. There's quite a lot in Auckland as well. The unemployment rate here is a bit lower than the national average as well, so that's obviously got to be supportive for households, for example. Consumer confidence, when we did our consumer confidence survey last week, revealed that consumer confidence in Canterbury had bounced back a bit more than the average as well. So it all hangs together for a relatively positive story, I think, for Canterbury.
What are we doing good at apart from the likes of tourism and, say, services?
Well, I think probably the cost base in the Canterbury area is very attractive. So I think that probably encourages businesses to operate here. I think in this world where now there's increased more remote working and virtual working, it's meant that people are able to kind of think a bit more creatively about where they base themselves if they want to do an economic activity. And that makes places like Canterbury, I think, attractive from that perspective.
You also talk to the Business Canterbury members about Westpac's regional economy data, which I know is due out next week. Give us some take-homes as to what you can tell us, what's in that report.
Well, I think that it very much mirrors the recent Business Canterbury survey, which basically suggests that the consumer is a bit more upbeat here. And the employment situation seems to be a little bit better than what is otherwise a fairly grim picture nationally right now. So, a lot of the anecdotes that we get on the ground from our bankers here also tend to reflect that sort of sense that whilst business is hunkering down a bit because these are tough economic times nationally, there is some light at the end of the tunnel, particularly, I think, with respect to the services sector.
When you say services sector, what do you mean? Who are you talking about?
A lot of that is orientated towards the tourism sort of market, I think, and we can see that in other parts of the country, which is similarly leveraged. Otago and Southland, for example, is another area where it's just better times. So I think one of the kind of really tangible anecdotes I saw was from businesses saying that if you were at all leveraged to the increase in international visitors, then times were definitely better for you.
How much does the Canterbury economy influence the data on a national level?
Well, it's certainly a meaningful part. The percentage of total kind of like national GDP is somewhere in the region of 15 to 20%. So like that's obviously meaningful. And, to the extent to which some of the particular sectors that Canterbury is involved in is a bellwether for national trends, and that's important. And I'm thinking there is the tourism sector, but there's also the agri sector as well, which is obviously something that's relatively important here. I guess the challenge for the agri sector is it's having a relatively tougher couple of years. Cost pressures pretty high, global demand relatively low.
In terms of the Canterbury economy this year, we are feeling, as I think you kind of put it, rather confident. Will that continue throughout the rest of the year, do you think, given what the government's alluded to today, saying we won't get back into a surplus for the next at least 4 years? Does that have any bearing on consumer confidence or business confidence?
So we think that business and consumer confidence is recovering mainly because cost pressures are really starting to return to more normal levels. And also there's the potential that there will be lower interest rates at some stage. Our view is that it might not be this year, it could be early next year, but at least there's that sense that the really heavy lifting in terms of dealing with higher interest rates is we're a fair way through that, and that there are better times ahead.
Just finally, how much of that is cyclical compared to government intervention, compared to perception?
Well, I think perceptions are quite important when it comes to dealing with confidence, right? So that's a really important driver of things like the investment cycle. The firms won't invest unless they have a fairly good sentiment about future prospects. That's probably one of the reasons why the economy hasn't really done so well in the last year. The GDP data suggests that nationally, economy's been pretty flat and the investment cycle is very weak. Credit demand is really weak, for example. We would anticipate, based off some of those early indicators from business services, that there are better times ahead in that regard.
Let's hope so. Nice to meet you, Kelly. Thanks for your time.
No worries at all.
Thank you
very much.